Hello guys, welcome to our YouTube channel. This is going to be our first official YouTube video. I'm so excited. So today we'll be talking about smart money concepts. We'll be breaking it down, the strategy that has been changing the way retail traders look at the market. If you have been confused by the term like break of structure, change of characters, liquidity grabs, or breaker block, this is the one for you. So let's simplify it really quick. So what is smart money? Smart money simply refers to big players in the industry like banks, institutions, hedge funds. They don't trade like you and I. They don't trade with smaller capitals. They are basically the ones that move the market. They move massive orders and they need liquidity to do so. You probably may have seen price fake out, price take out your stop loss, then boom, in the other direction. That's not random. That's smart money hunting liquidity before making a move. So, what are the key concepts in trading with smart money? In trading smart money concept, what are the factors to consider? What are we looking for? How are we going to play along with them? So, we are going to be looking at liquidity grabs, break of structure, change of characters, and breaker blocks. Those are the four areas we're going to be focusing on. Let me list them out quickly so you can see. So what's liquidity grabs, also called liquidity sweep or stop hunt? Refers to movement when price move past obvious high or low to trigger a stop loss order or collect liquidity and then reverse direction. You are probably seen a case scenario where price will weak out your stop loss and then continue back to your direction. A lot of traders usually put their stop loss order above swing high for sellers or below swing low for buyers. These stop loss are pending orders in the market, a pool of liquidity. So what the big players do, like banks and institutions, they need liquidity to feed their large position without causing slippage. So what they do is that they push price into those liquidity areas above high or lows to grab and to activate those stop losses and grab liquidity and then move price to the direction where they really intended for the price to go in the first place. Let me show you a chart example of that playing out. So take for example this chart example. You can see price is clearly in a downtrend. So what is happening? You'll be looking for sale. Let's take this place for an example. You see this is the previous high. What did price do? Came, wicked it out. For early sellers, what they will do is that they will enter their position here. They will enter here because they are using this demand zone. Place a stop loss slightly above the demand and target the next low, the recent low. What did price do? Price came, tapped them in, moved down a little bit, whip them out, and then go to the direction it intended in the first place. This is not random. This is the smart money. This is the big players entering into the market looking for liquidity, and they sweep a lot of stop loss orders that are resting here, sweep them out, then go to the direction you intended in the first place. So we are done with liquidity grab. The next one there is break of structure. So what's break of structure? A break of structure in trading, especially smart money concepts, simply means when a market breaks a key level or low that was defining the current trend. In an uptrend, break of structure happens when price break above a previous high. Like in this case, you can see this was the previous high, price broke it, create a new higher high, broke it again, create another higher high. This is an example of break of structure. In a downtrend scenario, this occurs when the market breaks the previous low. Take for example, price broke structure to the downside here. It also broke this recent low. This is an example of break of structure to the downside in a downtrend. It signals a continuation of the current trend, not a reversal. Break of structure happens when price keep breaking high or low to the current trend, to the opposite side, to the current side. This is when a break of structure occurs. It does not mean that the market is changing direction. It simply means it signals a continuation, a trend continuation. Break of structure signal a trend continuation. So let's get to the next one, which is change of character. Change of character. What is a change of character? It simply means when a price shifts structure from an uptrend to a downtrend. It means price kept making higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then broke structure to the downside, creating a lower low, lower high, lower low, lower high, lower low. This is an example of change of character. This break right here, it's what's called a change of character. It means price was in an uptrend, the price broke structure. This was not supposed to be broken, but price broke structure. What does this signify? It signifies a change reversal. It means price is moving from an uptrend to a downtrend. So we start looking for sales. We do not start looking for a continuation. We do not start looking for buys. We start looking for sell. That's what change of character simply means. It means a shift in market structure, a shift from an uptrend to a downtrend, or from a downtrend to an uptrend. This is what your change of character signifies. It indicates a shift in market structure. So the next one there is breaker block. So what's a breaker block? A breaker block is a failed order block, a failed supply or demand. It simply means that after price breaks structure to the opposite side, the demand or supply zone there now serve as your breaker block. The last bullish candle in an uptrend before a bearish move to the downside becomes your breaker block. This acts as a form of resistance zone. When price come back to it, we test it. Smart money traders look for entry in that position. Let me show you a chart example of what a breaker block looks like. So here is an example of a breaker block. You see, this candle here was supposed to hold price. Price broke structure to the upside. So what we anticipating price to do is price will come to this level, retest it, and continue to buy. But what did price do? Price get to this level, broke past it, creating a change of character here and creating a break of structure. So what did price do? Price came back, retest it, and continued to the downside. What did he say about breaker block? It's a failed order block that serves as a resistance zone. See, price came back, retested it, broke, then came back, retested it, then went down. This is an example of a breaker block. We'll be doing more examples in more videos to come. So we've explained liquidity graph, break of structure, change of character, breaker block. So how do we put them all together to get an entry? So how do we use all of them simultaneously to get an entry, to enter a trade, either a buy trade or a sell trade? So let's take an example. Let's see how we can use all these to enter into an actual trade. So in this place, we can clearly see that price is in an uptrend. What happened is that price came here, swept this liquidity. Let's mark it out as X, which signifies as price has came into this level and swept liquidity. Then what did price do? Broke structure to the upside. Let's mark this out as break of structure. Then price came, pull back to this level, which signifies our liquidity, our internal liquidity. We are anticipating price to come back and sweep this liquidity for early buyers. Let's mark that as our liquidity. Then price came again, broke structure to the upside, And how do we enter this trade? Then we use our breaker block. which is this candle here. It was supposed to hold price. Price is supposed to come to this level and push price down past this previous low, but price broke through it and created another block. So how do we enter? We just put our buy limit here. We place our buy limit here and we wait, set our stop loss below this low, and we wait to set our target into this area, and we wait for price to pull back. What did price do? Price came back, tap it on it and bought. So that's how you use your break of structure, your liquidity and your breaker block. So by thinking like a smart money, you stop chasing indicator and start following the trend. The trend is always your friend. So I hope this video helps simplify SFC for you. Drop a comment, say MCC makes sense now. I will get a full breakdown on each concept that is coming soon. Don't forget to like, share and subscribe. See you on the next one. Thank you and God bless you.